Welcome to Markets Now. I'm Michelle Rook along with Mike Miner with Professional Ag Marketing. Some pressure in the livestock today. Grains quietly higher, and it was a really quiet day here today, wasn't it, Mike?
It was quiet, but it's been pretty quiet lately, really,
Yeah.
especially in the grain markets here, as we haven't had a whole lot to push us around recently.
So we are in the grain trade kind of consolidating after we hit some highs on Monday because we've run up into some more chart resistance, especially in corn and soybeans, haven't we?
Yes, and really on the corn side here, this consolidation sideways, we've seen the Bollinger Band start to really come together. I'm wanting a breakout towards the end of this month. Hopefully, we can see something. Hopefully, more to the upside here to see with tighter ending stock still. That we've got some weather premium. We can start adding into this. We'll get a better picture on 23 balance sheets to come. Proposed acres. We're starting to hear some pretty lofty acreage numbers out there as well for what we could see. So we're going to start talking about a lot more in the grain complex to come than this normal just Argentina. Are we dry? Are we not going to be dry in our forecast that we've become accustomed to in trading, especially in the soybean market?
Yeah, and talk about that. Has the Argentina story kind of played out already? Because meal looks like it's put in a top or a reversal, and that's where we were putting most of that premium in.
Exactly. And we've seen the meal market really rally up to this $500 level in the nearby months. And that's continuing to be a resistance point from historical perspectives that we have troubles keeping above. And we did it again on this rally, and we're running out of a little bit of time to talk about the Argentina crop. We've pretty much known what the story is there. The USDA has adjusted accordingly, and private analysts even are still sticking in this higher to mid 30s on Argentina. And really, with Brazil harvest pressure, like you've talked about before, we're going to start coming into realization that we've still got near a record crop in South America on soybeans. And that story will probably be had here pretty soon.
Yeah, and some of those early reports are coming out of Brazil look like their yields are very good, don't they?
Yes, they're going to have a record crop there from the looks of it out of Brazil. And South America as a whole still is about record production in total. And with Argentina being about a third as big of production as Brazil, Brazil's still the main story there. I look for that weather story to shift more towards talking about the late planted Safrinha second crop in Brazil and talking more about their crops pushing the pollination time frame into a hotter weather period. And I think that'll start to gain a lot more traction going forward when talking about South America weather.
Yeah, that could give a boost to that corn market if there's one catalyst there. So, in terms of this soybean market, though, with the Brazil crop coming on, we also see that China's basically starting to switch their purchases over to Brazil, aren't they?
Which I think they would prefer anyways. Our
Yeah.
US dollar is still really high. So we could get a little bit more competitive in the export markets for all of our grains. And that'll probably just take time. We'll see what the Fed's going to do here with interest rates. It looked like from the PPI report that we got again today or yesterday, it looked like it was a little bit hot coming in from their expectations. So that's another point, I think, when we start looking at the export market to keep an eye on.
Yeah, both PPI and CPI coming out above expectations, kind of pushing the dollar back higher here now, too, right?
Exactly. And honestly, at this point, that maybe doesn't help the soft landing perspective that we've maybe talked about.
Sure.
Retail sales have been coming out as well. So I really look for the US dollar to have some more resistance on it, especially when people like countries in Germany are raising interest rates aggressively fast as well now. That should help put some more pressure on the US dollar going forward.
Wheat market, we have seen a pretty nice rally off of the lows, but can we keep going here? I mean, do we need to put more war premium in, weather premium in? When do we start doing that?
I think the volatility's just started again. We took a really long break there from talking about the wheat market and the impacts of the Russia-Ukraine war impacting that market. And really now to see that start to spill over, we saw a 25, 30-cent jump the other day. We're starting to see more of that volatility come back in as we near the 1-year anniversary of their invasion at the end of February here. So that'll become a little bit more exciting volatility wise on this wheat market, I think. And it could open the doors to some higher trading ranges going forward, especially since the fact, we haven't really talked about it, but the wheat market in Russia, they've got a big crop still
Yeah.
that they've had a lot of exports on. And if we start to see that get hindered, I think we'll see the markets react pretty fast to that.
Yeah, we keep seeing those higher estimates out of Russia, that's for sure. Okay, let's talk about the cattle market. Again, live cattle consolidating off the contract highs earlier this week. So that market just is continuing to wait for cash, right?
Exactly. And really, it's supposed to be a lighter week on cash, anyways. Bids are just below 160, it would appear this week, which I think a lot of feedlots are still looking for that 161, 162 area. When it comes forward for the cattle market here, we saw better box beef values here this week, and I think that was one of the more bigger stories in my opinion for this week. We saw it up three on Wednesday, 2 on Tuesday there for choice box beef. So I feel like that could help the packers out a little bit. We've
Okay.
been seeing weakened margins, and I think they could pay up a little bit more if we get some better beef values here, as demand is somehow still good in the United States for beef, even at these elevated levels, and that could help some of their aggressiveness in buying going forward.
And speaking of the product, you're watching those product values in the hog market and think that that's a little problematic yet.
It is. The hog market, when I look at the product values here, it's really what's holding these futures back. Last week, we had some really nice cash levels. We started off the week pretty hot and heavy on Monday and Tuesday for futures, and cutouts kind of held it back. We're hanging around this $80 level still. We're going to need to see some advancement higher to really get these futures to respond well, especially in this April contract up front here. It's at an $85, $86, $87 level, so a decent spread to where we've seen the cash market here. And they aren't going to want to put too much premium back in that April too fast until we see some sort of reaction out of that product values.
You bet. It's got to catch up here to the futures for sure. All right. Thanks so much for joining us, Mike Miner, Professional Ag Marketing, and that's Markets Now.